Greetings and welcome to this week's edition of 401k Real Talk. This is Fred Barstein, contributing editor with wealthmanagement.com's RPA Edge and CEO at Trow, TPSU, and 401k TV. I read all of the industry stories and select the most interesting and important ones, providing open, honest, and candid discussion you will not get anywhere else. So let's get real. First story is, while many were predicting that the war for talent would be relenting, the strong job growth in July told a very different story, with 528,000 new jobs added, up from 400,000 in June. The economy has now recovered all 22 million jobs that were lost during the pandemic, and the unemployment rates reached a 50-year low. Wages increased 5.2% from a year earlier, which likely means rising inflation and higher interest rates. At the same time, surveys are showing that the Great Resignation may be turning into the Great Regret. 72% of new employees regretted or were surprised about their new position, and just 26% liked the job enough to stay, while fewer workers are remaining at their job for more than a year. All of which will only increase the focus on retaining employees, which could be more important and certainly less costly than hiring new ones, with benefits a key factor. Next story, reviewing 841 institutional 401k plans, P&I reported that 110 or 13% made changes driven mostly by lower costs, which in turn could be the result of increased litigation. Fidelity was the big winner, though mostly with their passive funds, and Vanguard was the biggest loser. JP Morgan and Columbia Threadneedle led active managers, while DFA lost the most. There's also a move to using more CITs as assets grew due to the 2021 market. No plans added a target date that did not already have one, which probably means most of them use it. Next story is, as retirement needs, income needs grow, annuities are sure to play a larger role in DC plans. To that point, Integrity Marketing Group, one of the largest insurance marketing organizations, acquired Annexus, an annuity IP and distribution firm, which has been developing in-plan retirement income solutions, partnering recently with firms like American Funds, Nationwide, and State Street. Integrity has 6,000 employees working with 500,000 agents focused on health, life, and wealth, with $30 billion in their RIA and broker-dealer. The IMO industry has been consolidating quickly, and with the passage of the Affordable Care Act, there's been speculation that healthcare brokers and organizations like Integrity will focus more on wealth in the form of retirement income, and DC plans leveraging relationships with employees using their healthcare services. Next story, Hub has acquired Wealth Plan Advisors, a $2.3 billion RIA based in Scottsdale with 600 clients, which is their 21st acquisition since 2021. Led by CapTrust, RPA aggregators have been focused on acquiring wealth advisors to leverage the DC plans to find wealth clients more easily, a trend that is sure to accelerate as wealth and retirement converge converges at the workplace. While plan level fees continue to decline, wealth advisory fees remain very strong, fueling the race to service DC participants and a possible reckoning between advisors and record keepers, which I covered in my column this week on RPA convergence and is sure to be discussed at the September roundtables, first for record keepers and then for broker dealers. Could we see RIA aggregators start buying RPAs and BDs doubling down on DC plans? Stay tuned. And finally, if you thought the adoption of Bitcoin by Fidelity was an anomaly, or that cryptocurrency is a fringe investment, think again. BlackRock announced a partnership with Coinbase, the largest crypto trading platform, causing their shares to increase 15%. Leveraging Aladdin, BlackRock will make Bitcoin available to institutional investors overseeing their exposures. Could DC plans be next? So those were the most important and interesting stories from the past week. I listed a few others that I thought were worth reading. Please let me know if I missed anything or if you have any comments. Otherwise, I look forward to speaking to you next week on 401k Real Talk.